address the sector of the day and really the stocks of the day, which is, of course, all these city gas distribution stocks. If you see, both IGL and MGL are surging in trade after the unified tariff regime and open access regulations come into play. Sonal will explain to us what they mean and why the stocks are up like they are right now. Sonal?
Thanks a lot for that, Anuj. Well, let me start with the first regulation that has been notified, the open access regulations. Well, the market was fearing if extra competition will come in for the 20% volumes that were given out, it would lead to a 13 to 14% decline for EPS for all these companies and bigger for IGL and MGL. That is why the biggest hangover is allayed, that yes, there will be 20% volumes which will be given up, but the biggest positive is that oil marketing companies and the dealers will not be able to take away any part in those 20% volumes. And that is why a lot of these brokerages are saying that there will be no impact of volumes on CGD companies like IGL and MGL. Do remember, these companies have around 60 to 65% of their own stations in tie-ups with oil marketing companies, and there was a fear that if these regulations come in, oil marketing companies will terminate their contracts with these companies and go ahead and dispense their own stations. Since that has not happened, these companies are surging in trade. The other positive was there was a regulation which said that maybe their exclusivity could end if they were not able to improve the infrastructure. That particular section has been quashed, and that is another positive. Jefferies says there will be no negative impact on the EPS for these companies. Kotak Institutional Equities has in fact raised the EPS estimates by 6 to 13% and has upgraded both IGL and MGL. For Gujarat Gas, it is not a big impact because they do not have bigger CNG volumes. However, important to note that there will be competition. It will just not come from the OMCs and the dealers. The second one is the unified tariff regime, which means there will be a unified tariff for more than a dozen pipelines in the country, which is run by GSPL and GAIL. Well, new regime will have two sets of tariffs, one till 300 kilometers and next beyond that. This is in line with expectations. The tariffs at 57 rupees per MMBTU, but it is negative for the consumer companies like fertilizers or maybe city gas distribution companies as well. In fact, CLSA says that it could increase cost by almost 5,000 for some of the customers, and maybe that is why it is not practical and could be challenged legally in the courts. And MK says the unified tariff is mostly neutral, but this regime is something that the street was expecting or waiting for from a long time, and that is why the kind of reaction that we are seeing in the stock prices today.
Whatever is the increase or decrease that would happen on day one, which is the appointed date. But as we go along, there would be increase in gas consumption, and when gas consumption increases, there would be reduction in tariff for everybody. The other systems which we are putting in place is gas exchange, and this particular mechanism is for enabling the gas exchange also. And when the gas exchange comes, then even the customer would have an option to buy from multiple sources. So there would be gas on gas competition. Because of this, the gas price itself would reduce. So tariff is only a very small component of the gas price. When the gas price itself increases because of competition, I think everybody stands to gain.
We were discussing with PNGRB along for this particular for the day, and they have come out with as regard this CNG stations are concerned, they came out with basically what we have asked for. Whatever the infrastructure has been created by the entities, those who are operating the GA in the GA, that should be there with the entities, and that they have agreed. So as a result, whatever the stations as on date entities are having, so they would be keep on operating the same. So we don't have any threat on that particular aspect. And if you see, as per the act also, for additional infrastructure, and if anything is required to be done by the it is to be opened. So that was the point, and we have discussed, and PNGRB has agreed for that, and it has come out as these regulations. So it is good for all the existing entities. They would be able to maintain their own business at the same level.
Okay, now let's invite our experts, Prakash Diwan and Deepan Mehta, joining us. Gentlemen, good afternoon. Prakash, big move in both IGL, MGL, some of the other stocks like Gujarat Gas also doing well, though off the highs. How are you approaching this news, and would you add any of these stocks in your portfolio?
Good afternoon, Anuj. So, to be honest, this was a long time waiting. It was on the cards. It's happened. You've seen the kind of reaction, a bit over the top, actually, if you ask me, because all the impact is not something which is going to start reflecting in the next quarter's EPS. The re-rating would take time as the consumption also kind of starts finding an equilibrium. So I would book profits. I have, in fact, I'd recommended Gujarat Gas, if you recall, 2 quarters back. It's done a stellar move from there on. You got MGL, which did such a strong move. But remember, there are lots of ifs and buts in the policy. The impact of the policy will take some time to get digested on P&Ls for most of these players. But I would believe it's a good time to take some money off from that. If you had to play this move, if you had to really play this move, I think you're forgetting the fact that the equilibrium, the unified pricing mechanism will also help the IEX platform, which has actually initiated gas trading along with electricity. I think it's being undervalued all sorts because people haven't realized that it can scale up so rapidly. And without any incremental expenditure, this is an exchange, this is a platform that could actually start benefiting from a very significant revenue stream that goes up. So I would put my money on an IEX rather than clamor on some of these actual players on the distribution side.
Okay, that's gas distribution. Let me bring in Deepan Mehta into the conversation as well. Deepan, let me ask you about the other end of the gas spectrum, because now we'll have new sort of formats for tariffs, etc. in place. So let's say for a stock like GAIL or Petronet LNG, I mean, what might the next couple of months bring? Do you like these plays?
No, not really. I think that I would still like to go with the city gas distribution companies. And since they have come into play last decade or so, they have created significant value and also been of great service to society per se in terms of reducing pollution as well. And some of the uncertainties around the business model have been addressed with these recent developments. And although these are utility companies and therefore they have some advantages, but they still have significant growth in terms of their volumes because of increased use in transportation as well as industry. And recent NGT orders on use of polluting fuel stock certainly benefits these companies. So I'm very positive on city gas distribution companies. And to play the entire gasification of the economy theme, I think these are the best plays. Petronet LNG has been a great value creator, no doubt, but I think it is facing capacity constraints at its largest regasification plant. And even the other one in Kochi, I think that's not at optimal level because of supply-related issues like the pipeline not being in place. And GAIL and GSPL have not really been great value creators in the past. So I think if you want to play the entire theme of city gas distribution or use of gas in the economy, the best would be to play through these city gas distribution companies. And keep in mind, they have very high return ratios and will throw up a lot of free cash once their initial capex is done for laying the pipelines and providing the gas connectivity.
Okay, well, some of these stocks have done well. The market is slipping a little bit, down just about 22 points. Now, today, you know what, the FII number would be very interesting because today what you would see is very high gross numbers. Both gross buy and gross sell numbers would be, could be somewhere around 30 to 35,000 crores. The net number, of course, would be important because there's this MSCI rebalancing which is happening. There are a lot of names, of course, where there's still some flows which would happen. They would be balanced on the other side, of course, by some of the other funds. So it's not entirely going to be an inflow. And like you've seen, for example, with the Kotak Mahindra Bank or an Apollo Hospitals or a PI Industries, some of these stocks have already rallied quite a bit. And on the other hand, if you see the stocks which are rallying today, which were getting out of or getting their weight cut, for example, an LIC Housing, or if you see, for example, Bosch, 2 days back, it had a rally. Today also, Bosch is rallying. So if you're seeing right now on the screen, the ones where there's expected to be outflow, they are the ones which are actually rallying, and the ones where there's likely to be inflow, they are the ones which are actually seeing profit taking. That happens. But there's usually one last round left at 3 p.m. But the flow data today would be important because, as I said, the gross numbers would look very high. And then after that, what would be important as we move into the December series full time next week, after this truncated week, is whether we sustain those 5,000 to 6,000 crores kind of flows. That's going to be the important part for this market to sustain at these levels. So I thought that was important. So hence, I thought I'll just take a couple of minutes to explain that.
Oh yes, absolutely. I guess that really holds the key, Anuj, as you said. I mean, whether this kind of money flow continues to come in or not, or whether it was more of a MSCI perhaps rebalancing effect. We will take a break on that note. On the other side, the conversation continues. Lots of stocks and sectors to discuss, and we will also be chatting today with